Hello and welcome. I'm going to make this quick and hopefully informative. This is just a cursory thing. We're just looking at broad trends in the market. That's all you really need if you're playing the long game. If you're day trading by the hour, then yeah, you'll want more refined strategies. But if you're just a normal person, I'm going to tell you how you should be trading. You should be putting all your money into safer stuff if you don't know what you're doing. QQQ, that's somewhat risky, not too much, but gives you a little bit more ups and downs. VU is probably what you're going to want, but you don't want to buy it high, you want to buy it low. The first rule of investing is buy low. That's it. If you can buy it at a cheap enough price, it doesn't matter what happens, unless you, of course, assume that that's low, but it's not really low. That's the trick. But if you can buy it for cheap, where you know it's cheap, like VU. VU is the SP 500, the Vanguard version. VOO ticker, right? You can. There's many variations and other things that are very similar, but if you don't know, then this is the one you want, or anything similar. But this works great. Okay, so this blue line here, MA200, that's the 200-day moving average. That is one of the gold standard lines for reading charts. I've also got the 50 up here, and I've got the RSI and the VWAP. Okay, but we're going to be focusing just on these two because these are the most important ones that a normal person should be looking at. So right here, moving average, right? Now, when the stocks are above the 200, but the 550 is also an important measure, that means that it's on sale. If it's below this blue line, this 200-day moving average, it's on sale. And if it's something that, like VU, right, buy it. If it's below 200, buy it. Look, they go over 200-day and it went up, right? And even when it goes down, it's still nice down. So if you bought it in March, this whole time, all these little vibrations here meant nothing to you because you bought it down here. Easy, right? So right now, it's underneath the 50. And this is at the 1 year timeline. It's underneath the 50. But it's still above the 200. But you see how the 200's moving up and it's accelerated. It's saying, I'm actually going to double down. I mean, look at it. Hasn't got. I don't think it's going back down. I don't think it's going back down. I don't think that the stock is going to go to the 200 line. I think the 200 line is going to go to the stock. All right. Because it's a moving average. It's just the average for the past 200 days, right? So, hence 200-day moving average. And so, these lower prices will be less and less relevant to the moving averages averaging. And so, this line is going to meet up with this before this reaches down. So, right now, I think, and let's go to 3-month view. Right now, I think it is the perfect time. I think it's done wiggle-waggling around. I think we've pretty much hit a bottom. Now, bad news can change anything. Actually, Iran does have nukes, and they just hit DC, LA, Paris, and every other place in the world, right? But assuming that's not the case, I think it's pretty much hit a low. And so the average person should probably be, if you've got some money, you should be buying a stock like VU or QQQ even, right? Let's look at the same thing with QQQ. QQQ is more tech heavy, more your Google, unless you're, some company that produces toilet paper or something that is undoubtedly very profitable, but not the sort of, it's a slow and steady grower, right? So down here, QQQ, right? It's a little bit more volatile. I think this is pretty much as bad as it's going to get. So now for the other people who want to be a little bit more extra, how can you maximize this? Now, I could just buy QQQ. And that's actually a great idea. I could just buy QQQ and call it a day. And that's probably the smart, rational thing. But if you want to, if I'm confident, which I am, and I want to see if I can maximize that, there are some other things. We have TQQQ, which is a triple QQQ. You can have the double as well. There's QQQ, which is 1x, right? That's just QQQ. Then there's QLD, I think, is the double, which is 2 times. But I usually skip that one. I'm doing QQQ or I'm doing TQQQ if I'm playing the Qs, which I haven't done. I do it only around certain times. A couple years ago, we had the exact same similar thing, about the same time of year actually, and I made a killing doing exactly what I'm going to do. Well, actually, I did. I bought a bunch of straddles and strangles, but it's just always the calls would win. But you don't need to worry about that if you don't know what those are, because that's a different game, and that's not what we're talking about here. Triple Q. So this is 3 times. If Q, right, QQQ goes up 1%, this goes up 3%, which you might say, hey, that's 3 times as good, and that is true. However, if this goes down if QQQ goes down 1%, this goes down 3%. And the loss of 3% is more money than a gain of 3%. That's just how the math works, right? So, if you hold TQQQ, it's not as good as just holding QQQ because the downs will drag on you more than the ups will. That's why you don't hold it long term. But for a situation like this where you think you've hit a bottom, like look, TQQQ, it's underneath the 200-day moving average. Because like I said, it's not as good a long-term hold, right? So this is actually a really good sign. I haven't even seen this because I hadn't been in the TQQQ chart here, but it being below it here is huge. So this is even more strengthening my opinion. So if you really want to maximize, you buy a leveraged position. And if you really want to do it, you do it on margin. So if you have $1,000, you can invest $2,000 in TQQQ, which is like having 6 times if you had just bought $1,000 worth of QQQ, which is a lot of money. Now, I did TQQQ options. They're slightly cheaper. Straddles and stuff last time. This time, I'm just buying TQQQ stock. I'm also buying some others, some VU heavy ones, like we were talking about VU, and I'm doing this not with my main money. This is with my fund money, which is going to be getting more and more. But there are. I mean, let's just type it in right now. It's easy as this. Leveraged QQQ. ETFs. Let's do it. See if we can find. 5x. Whew, that's. Let's type in list. All right, here the AI just gave us something here. So you can do also SQQQ, which is the opposite of TQQQ. So yeah, I didn't mention that. If you think it's at a really good high, let's say, let's go to 1 year. I'm right here, and I think, there's no way it keeps going up. It has to be at an all-time high. You could buy SQQQ, and it is, see, look, it went down. This is the 1 year SQQQ. Yeah, SQQQ is usually going down because it's the inverse, right? But you could have bought it. Well, that wasn't a year ago, was it? SQQQ. Oh yeah, that was like let's see what that month was. Right here. This is in October, November. So mid-October. Oh yeah, that's right. I remember that because it's a very important time. Right here, mid-October. So right here. You bought it right here. Then it's up here. It's if you're buying it right here at this very bottom, you're still up right now. It's not as grand as the so we'll do SH. Now this is ProShares short the S&P 500. I think it's only 1x, and it's less bad, but you can buy both as well. It's just usually the short ones are not good long-term holds, and it doesn't make a very effective strangle. So I don't normally buy these. Sometimes I will buy shorts to offset. So if I buy, like I did buy some SH and stuff, because I bought TQQQ, and that's a bit risky. So they kind of de-risk a little bit at TQQQ. So if it does go down, I can just sell some of my SH and make a small profit. And that's what I've been doing. But now is the time, assuming the market is in our favor. Now, why am I so confident? Well, it's because of what I just showed you, but also the main thesis of all of this is, let's go to 5 years. Stocks always go up over time. Let's say max. Okay, 2001, right? You're buying down here, right? Sure, it's like saying down here, oh, stocks are all going, they never go down forever. Not a QQQ, not your VU. Okay, individual companies fail. It's just like in life. Individuals get unlucky, but societies always get what they deserve. Right? Individuals, you can get unlucky. You can be a good person and get in a car wreck or whatever. But as a society, has a large enough group with averaging and everything, even if some people fail, it averages out that things always get better. Or, shall I say, people get what they deserve. And deserve might not only come from a moralistic standpoint. Deserve is, if you fail to plan for winter and winter comes, you deserve to starve because you failed to plan. That's the rules nature has, and stock market is. This is a human-made. This is the whole point of stock market. It's a human-made synthetic version of reality, in particular, nature, right? And so you have people who get unlucky in the stocks. Stocks, they get unlucky. But on the whole, things go up. So this, if you see this is the time to buy. Not here. But here's the thing. Even if you did buy here, it's gone up since then. You just had a little bit of a low point. So it's never really a bad time to buy if you're just buying and holding. Long term. In a couple years you can get unlucky, but if it's usually a couple years, 1 year, maybe 2 years. Depressions don't last forever. If you had Colgate stock or whatever back in the Great Depression and stuff, it went from 50 cent to 40 cent. Okay, but it's like $50 now, right? In the long game, it always wins. So, I mean, look at this, 512.98. So you tell me. Right, this is since 20-something years. Are you going to retire in less time than that? No. If you had put all your money in QQQ in 2001 or whenever, 2011, 2015, 2021, you'd be up a ton. This is why I say you just hold these things. For the average person. Now, if you want to be Top Gun, big dog, you're Mr. Wolf of Wall Street, you're going to be Mr. Cool, and you're so much smarter than everyone else, and you might just be, then, play games and stuff. And if you're doing that, you might say, oh, look, this is only a little bit. Well, yes, but also, look at this trend. I'm not concerned long term, because my goals are 2 years out. I don't need immediate income anymore because I have a job now. But if you do need immediate income, then this is a different game altogether. All that to be said, I'm going all in. Well, not all in. I'm going to put a large sum of money. Not the first rule of investing, but a major powerful thing about investing is buy low, obviously, and secondly, sit on your hands most of the time. You don't always have to be doing things, okay? But if you see a misplaced bet in the market, if you see that this is just on sale, right? If you see a misplaced bet in the market like these guys who bought down here did, take advantage of it. Bet it all. Bet big. If you see a real win, which is rare, then bet big. That's the rule. Look for a win. And let's see here, May 2005. Oh yeah, this is on Liberation Day, right? So bet big when you're sure, when you have a sure thing, right? That's the rule.